Okay, let's study double declining balance method using the same example. So to make it, let's copy and paste. What you need to do is press the Control key and then drag and drop. Then you can copy the same spreadsheet here, and let's title double declining balance. Okay, under the double declining balance method, to discuss it, let's first recall what we've done under the SL method, straight line method. Under the straight line method, how much did we depreciate each year? The amount that we depreciated on the straight line method was, we spread the amount equally, the key is equally, over 5 years. So it was 1/5, right? Which was 20% each year. Under the double declining balance method, we double, okay, the percentage on the SL straight line method. Okay, we double the percentage on the straight line method to calculate the double declining balance method, which makes sense, right? That percentage, double of 20%, which is 40%, is applied to the ending book value, which is the same as beginning book value of this year, right? You accumulate the same as before, and then you subtract the accumulated depreciation from the book value at the beginning, right? And then you copy and paste, right? Again, for example, you multiply double, which is 40%, to the beginning book value of this year, which is the same as ending book value of the last year, right? Okay, so far so good. But one key difference between this straight line method and double declining balance method is, as you may have noticed, what do you see? 1011. Here, 1000. Oh, it should be $1,000. The 11 is sort of mismatching, right? So for the last year, we should sort of adjust if there is any difference, which is most likely, right? Then how do you adjust? We want this ending book value to be, again, $1,000, right? And we want the accumulated depreciation at the end of the useful life to be $12,000. Then, to make it done, how much should we depreciate at the end of the year, 5th year? We want to depreciate the difference between these two, which is 685, right? Which is the same as the difference between these two. 685, 685. Right. The rest of the accounting treatments are fairly, what's going on the second year, right? The second year. Fairly the same, so I will not recap them, right? And then let's have a look at the last method, which is units of activity method. Again, I will do the same thing. Units of activity method. Units of activity method. But here we have one more assumption, something like the big company expects to drive the truck how many miles? 100,000 miles. Okay, then what is the cost? How much should it depreciate? The truck when we drive 1 mile? That is the question. What do you think? We need to depreciate again. How much? 13,000 minus 1,000, 12,000. We need to depreciate 12,000, right? And we are assuming that we will drive 100,000 miles. What does that mean? We're gonna depreciate 12 cents when we drive 1 mile, right? Okay, sounds cool. Then that's our assumption. When we purchased the truck. And then at the end of each year, you found that at the end of the first year, you found that you've driven the truck 15,000 miles. At the end of the second year, 30,000, 20,000, 25,000, 10,000. And so that your total mileage at the end of the fifth year is, something is different. Oh, this is 20. Sorry about that. By the way, this is from your textbook, so I'm making the example the same as your textbook. So that your total mileage, which is 100,000, is the same as what you expected. Okay, that said, what would be your each year's depreciation expense? As you can guess, it's the per mile depreciation times your mileage, right? Again, 12 cents times, which is 12 cents per mile, right? Right. $0.12 per mile times the mileage, right? How many miles? 15,000 miles, right? So you multiply this and that, you get this number. You do the copy and paste, and then you can see that your chart is easily filled in, right? Okay, we've seen 3 methods: depreciation methods, straight line method, units of activity method, and double declining balance method. All right, that's the end of the depreciation methods discussion. And in the next video, we will study the sales of plant assets. Okay, see you there.